Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Friday, February 22nd. We did get some follow-through from our Wednesday sell-off, outside day reversal, but the sell-off was kind of quiet, just kind of a slow grind. I was really looking forward to a gap down Friday morning, run them down hard, and then reverse, and then close up and take back about 25, 30, 40% of that red engulfing candle. Well, that did not happen. So we actually just gapped lower and grinded down most of the day, and then actually we kind of had a good pop. Interesting development too, actually. Apple actually closed in the red. However, it was almost positive into the close. So that looked to me that maybe buyers are starting to step in, and you have to understand if you're real negative on this market, and you must be really frustrated because obviously the bulls kept every time the dip comes in looking at opportunity for buying the market. That's exactly what has been happening. So we're gonna really see. Today's gonna be very interesting. Could be a little frustrating for a lot of traders if you're not looking at the right thing. And I think that today may be a sort of a quiet day. I think, in my guess, and again, this is just an opinion, I think that the markets may look to try to close up on a green today, and that's going to be a good thing because I think the market's due for a pullback. Again, a 4% correction is not out of the cards, and would still have this market in a bullish tone. So keep that in mind. We don't want to be looking to sell the market and sell it in the hole, basically. So I'm looking for a little bit of a bounce here. We'll monitor the bounce, see how the bounce, what the reaction to that bounce is. And if it's a weak bounce, what I'd like to see is 15, 15, 15, 18 in the SPX cash, and then look to probably resell this market and let the market tell us that price is moving lower, volume is increasing, and we can really get short the market and get aggressively short selling rallies. But until then, we want to really take a step back. We want to watch and see what happens. Remember, Wednesday was only about 3 hours of selling. Yesterday was pretty much of a benign day. We did get a sell-off, yes we did, but it was very, very quiet, a slow grind. So really there was no fear. I'm going to cover some of the indexes today, and I'm also going to cover some of the indicators. VIX did manage to pop for that last 2 days, so people are starting to buy some protection. However, we did close outside of the Bollinger Band, so that, to me, meaning that if we do close out, we need to see the price come back into the band, and that would give a buy signal to the market and a sell signal to the VIX. So there's a little bit of mixed signals here. What I am going to show you is some currencies, and in front of me we have the euro, we have the Aussie dollar, we have the US dollar, we have the Canadian dollar, and the New Zealand dollar. So we have some commodity block currencies: the New Zealand dollar, Canadian, and the Aussie. They have actually been defying gravity for quite some time, and as you can see here, the New Zealand dollar, no reason for the New Zealand dollar to be up at these levels, right? So, and we have the US dollar here in the lime green. So what's happening, as you can see, we are rolling over in all of our risk correlated high yielding currencies: New Zealand, Aussie, we have here the Canadian dollar, all rolling lower while the dollar is actually gaining some momentum. We also have commodities rolling over. We have a gold, we have silver, and we have crude oil all moving lower while we have getting strength in the dollar. And that is to be expected. So what I wanted to show you is that we have risk coming off, and it's a good sign when when I like to see Forex. When Forex starts to move, and risk off starts to come in, and then you have some of these safe haven currencies, which really we only have the mighty dollar right now. Swiss is pegged to the euro, and of course the Bank of Japan is intervening, so really kind of crushing the yen. However, the yen is due for a pop, so the yen actually had a little bit of a move up yesterday, so that's something also to watch for. But I just wanted to show you that we are having some risk off theme in the Forex markets and as well as equities. So that's looking pretty ripe for at least some sort of a decent pullback and some sort of a correction going into next week. And next week's going to be interesting because of the fact we're going to have an outside week reversal. So that's going to be obviously larger time frames takes precedent. So that's going to be really interesting to see what happens today. I would love to see a nice rally today, and then maybe a follow through on Monday morning, and then we start to sell the market off again. Again, we have to wait and see. We have to be patient. One day does not make a trend. Yes, we had a little bit of a follow through. We broke Wednesday's lows, but it wasn't. There was no fear in that market. So I do think we're going to have the buy the dip mentality probably today, and usually on Fridays we do have a bullish bias where price actually starts to move up, grinds higher on low volume. So something to just keep an eye on. Okay, so what do we have here? We have nothing on the econ data, right? So we have nothing going on for today. So most of the action is going to be price. All right, so let's take a look at the new highs, new lows, and as you can see here on the new highs, new lows, we have every time we ticked up to the 700, 800, 900 percentile range, we get a little bit of a pullback. So sure enough, we went higher, and we got our 2-day pullback. Again, 1500 is going to be a big spot. I'll show that to you in the charts, but just something to keep an eye on. All right, take a look at the bullish percent index. We actually have a sell signal in our point and figure. That's what this is based on. So we do have a sell signal in the bullish percent index. And on Monday, we're going to have a huge, I'm putting a big newsletter together because we're going to go cover weekly charts as well, and we'll see what's happening in the weekly charts. Okay, now let's take a look at copper. Copper was, to me, the big sell signal when on Tuesday we rallied, and copper had this big down day, and that was partly because of China saying that we're kind of holding back construction and what have you, and trying to slow down the housing market, and that was a big telltale sign to me, as well as the transports in Russell weak that Tuesday afternoon, and you could I mentioned that on the morning call video as well on Wednesday morning. So not looking too pretty. We actually, as you can see, all of these gains, and I keep mentioning, when the market pulls back, fear is greater than greed, and sure enough, look what happened. 3 days wiped out 2.5 months of gains in 3 days. Now we're coming to the downside here of this of the lower trend line, which does match the 200-day moving average. So I would expect a bounce here in copper, which would help equities as well. So actually, the futures are up 5 handles today, so in the pre-market session. So I do see some sort of a recovery for today, but again, anything can happen. Anything can happen. Let's take a look at the dollar, and just one chart of the dollar. As you can see here, we broke up the 200-day moving average, and I was mentioning this here during the week. I'm like, we have two bearish patterns. We have a head and shoulders pattern on the daily and on the weekly chart, and we have a descending triangle. And I mentioned that the pattern has been seen by many market participants, and when that happens, it usually does not happen. And that's exactly what the case is here. So this head and shoulders is gone because it tested the head. We're taking that out. That would just be now really a double top. I'm going to redo this over the weekend. Look at our dollar S&P cash ratio chart, breaking back up here above it. We are a little bit overbought. So even if we pull back to the 200-day, create some sort of a bull flag, and then move higher, that's still going to put a lot of pressure on commodities and equities too as well. Okay. Now let's take a look at the VIX. Very interesting here. Here's our Bollinger Band, right? And every time you get a break out of the Bollinger Band, what happens? VIX comes in. That means that puts a bid into equities. Break out, down. Break out, big, huge, big red candle right back down again. And that's exactly what we have in here, right? So what do we have? Pattern recognition. This little guy, down. This little guy, down. This little guy, right here and here. So this is why I'm favoring more of a bounce today, with copper being at support, with the dollar breaking out higher, now looking a little tired, looking for a pullback. So this does not surprise me that we get a little bit of a bid into the markets today. Okay, so again, follow it. These are technical analysis. It doesn't have to happen, but this is what I'm looking for today. Now let's take a look at our put call. Big spike higher up in the 110 area. Fear coming into the markets again. But again, guys, you know, we had 2 days. VIX actually had 2 nice days of moves. So let's see what happens. But again, telling me fear is starting to creep into the market. All right. Now let's go right into the charts here. Average true range over the overlay of the S&P cash. We are down here at the bottom, and again, as you can see, look what happens every time the average true range starts to come up. Obviously, volatility is picking up, and then we get a little bit of sell-off. Market comes down, and the S&P rallies. Down, S&P rallies. Now we're coming right back up again. So let's see what happens here in the next week. Next week is going to be very interesting because if the market doesn't rally really this hard, which I really don't expect it, we're going to have outside week reversals like I mentioned earlier. So it's going to be interesting to see what happens next week. Does the bulls come in, step up, and buy this market back up again and recapture what we've lost the last 2 days? It's going to be interesting to see what happens. Okay, now let's go right into our weekly. I wanted to show you the weekly chart of the spiders, and I'm only showing you this because this is what I'm looking for to see what happens today. We had a nice big 1 week down, so the previous week, last week, we have an outside week reversal. I'm going to see how big of a move we get today, if we get any kind of move. So let's just see. I just wanted to show you that weekly chart, and that's what I'll be showing you on Monday. Okay, S&P spiders daily chart. We have this little inside large channel within the channel. We broke the smaller channel, and we broke the 20-day moving average, and now we're catching this little consolidation area here, which coincides nicely with this outside channel. So let's see what happens today. Probably going to find a little bit of support here and probably pop up in this area. I like to see it recapture at least this small red bar from yesterday. Stop right in this 150, 180, 152 area, and then reverse on Monday, or even get a little bit of follow through on Monday for an opportunity to resell this market. And again, price needs to tell us where we are, where we headed before we get aggressively short. Again, we have a slow day yesterday, and we only had about 2.5 hours of selling on Wednesday after FOMC minutes. All right, spots here that are holding really nice. As you can see, 150, 150 we held here. We bounced back up. We broke through this area. 149.80 coincides nicely with the 200 period moving average on a 60-minute chart. So obviously these are valid support pivotal areas, and this is what I want to see a break now. Now I want to see a close below. And if we could close below, then I think the next rally after this closing of 149.85, 149.80, we will get aggressively short and start looking to sell rallies. Again, if that happens, Spider 30-minute chart in Bollinger Bands, as you can see here, we had a nice big pinch up here in the Bollinger Band, break up higher. We started pinching again in here, and then we just sold off again. So the Bollinger Band 30-minute, it doesn't tell you where the move is going to happen. It just tells you that a bigger move is happening when we get some contraction here in the bands. So this is a nice little indicator to look at on a 30-minute chart. S&P Cash Daily, our CCI moving lower, breaking below the 100. Momentum is waning to the upside. 1520, we did break above it, right? We mentioned we got 1530. We broke back below it, and we caught the 1495, literally almost to the penny. 1496, I think it was. 1495 support. My first target, downside target, is going to be 1475, and then we have to reevaluate. But this is going to look like a good test for next week. This is what I'm looking for. If we can get the market back up in this area. 1511, 1518 would be the zone area to look to re-enter short in the cash if you're following the SPX. Okay, here's a 60-minute, nice big bearish rising wedge from the beginning of the year. Did break down below it, and look at this. We caught S2 right into 200 period moving average. Our momentum indicators, as you can see, lower lows, lower highs, breaking down, and sure enough, we did get that breakdown. It was just a matter of time before we get some sort of selling. You can't just go up and up every single day when you grind higher like that. Again, like I mentioned, once you get a sell-off, it usually wipes out a good week or so of gains. Okay, so now we have today S&P 30-minute. We're back into this channel. As you see, we were in here for about 5-6 days previous. We bounced, we broke back up. We climbed higher. We consolidated, another pop-up, climbed higher, and then just lost momentum and broke right back down into this channel. So that's that was the theme basically for the last 8 weeks. Consolidation, 1 day move up, another 4 or 5 day consolidation, another pop-up. So it's been very difficult for traders who are not experienced in this type of environment to make money. And that's why I say cash is a position. Sit on your hands. If you can't find the right setups, reduce your share size and just wait for opportunity to happen, because it will happen. Okay, IWM's one of our leaders here. Risk on, risk off index, and as you can see, we had risk off for the last 2 days. Definitely distribution here. We are still overbought, so there's plenty of room to run to the downside here, guys, okay? So keep that in mind. We do have some room to run to the downside. XLF breaking out of a big bearish rising wedge. Usually what happens, we look for a pop, a back test of the lower trend line, then fail, and then we look to get aggressively short. I have no problem looking to short the banks, but this here is only 2 days. I'm not looking to get aggressively short banks. They have been on fire for the last 2 months, so I'm looking for this back test of lower trend line fail, and then obviously this low 1742, 1740 call it, on a closing basis after the back test has been done and fail is when I'm going to be looking for some highly extended banks to look to get short. Diamonds, not one of the followers, right? One of the followers, excuse me, not the leader. Here just kind of testing back into the support area, this little horizontal channel. So break back lower, would look to break below here, would just help the bearish case in the market itself. Now the leader, here's our leader, right? The transportation sector. 2 big down days, caught the 20, broke below the 20, but actually regained it and closed at the 20-day moving average. So we have, now what we did was what just opened up this channel a little bit. So we have price hit here, 2 days. So now we're in this larger channel, right? In this larger channel, if you will. Let me just tighten that up a little bit, right? And we have a smaller channel just grind higher. We consolidated to the upper end of the range. We broke back up. We failed. We took it back miserably on Wednesday, and then again Thursday we had a little bit of follow through. So needs a little bit of work here. Like to see transports pop back up and fail into this 105.85 area, and then look for some downside momentum, and that's where I'm going to be looking at the transports. If you're not looking at the transports, the Russell, copper during the day, you're definitely missing something. You need to be looking at this on a regular basis for those of you who are trading consistently during the course of the trading day. Apple, starting to get a little interesting. Apple yesterday, I noticed Apple was down a good $4. Again, Apple has an ATR of $13 a day when it wants to, so really not that much. But I like the way Apple held this sideways consolidation in here. If you could see here, this channel and of course this channel, we sold off low volume and then we started popping up back up again. So maybe again, I'm not saying one to buy Apple here looking for a 550 move higher. I'm saying as a trade you might want to look to see Apple, and of course yesterday's low would be your stop. Apple is still in a downtrend channel. Apple has a lot of work to do. I think Apple does go lower in the medium term, break 400 and probably capitulate down that area. I'm not saying it's going to happen, but it looks like it may happen. But for a trade, if the market has a little bit of a bid to it today, you might see Apple start to rally a little bit, 470, 475, and maybe even if it really gets out of hand, maybe the 485 area here. But it was interesting to see Apple caught a bid yesterday at the end of the day. It went almost positive. If I think it did go positive, and then sold off, closed back down to 250. But again, impressive move, a nice recapture of the day. So it'll be interesting to see what happens. We got a doji candle here at support. Really, you want to take out 449.60. That'll be the high, and then that'll really confirm that doji, and then we could probably look for a 460 test. And lastly is the Qs. A lot of work to do here. As you can see here, we did pop up and then we broke a little bit higher here. Okay, guys, really interesting. Today's going to be a big factor, so we'll keep an eye on it. I'm looking for a little bit of momentum to the upside today, some sort of a relief rally. It should be a quiet relief rally, and then let's see what happens on Monday where the market opens. But I do see us probably looking to sell rallies if this market continues with some downside momentum. Have a great weekend, everybody. Enjoy, and we'll have a full report on Monday. Take care.